The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Let's get straight to the nitty-gritties. Dow's down 85. It was up much more in the futures earlier this morning, up over about 100 points, actually more than 100 points. And then it dropped very sharply, and it was down at one point about 180 points. And now what we're looking at, so the low today is 25,308. It's at 25,459, 120 points off that, but it had a high of 25,480. So it is getting close to the opening gap down move, and we'll see what happens. There's still enough strength to say it could chop in this area. There is automated Chapman wave resistance. I'll show you right now. Let's get to it right here, 25,670, right there, a whole cluster. And it's been ruthless in trying to push through. The resistances, the power has been tremendous. But you can see that the MACD just starting to decline a little bit here. It hasn't gone negative, and the stochastic's at 85% off the low, recent low of 78, and so that is a good sign. So in the meantime, back at the ranch, what we're looking at is parameters. Make it simple. A close, not just a push, but a close above 25,625 today or tomorrow. I would say that that's really good. It could be another recycle to the upside so that we can go into the long weekend with some positive bias. But if there's a pullback later today, we've got to watch that really closely. And of course, you've got in the SMHs, you've got SMHs right now are, where are they? They're up 17 cents at 101.90, made a new recovery high today of 102.71. And applied materials, and what else is it? And NVIDIA come out with earnings today, and that could really do something to the markets. Maybe there's a mixed reaction between the two. That would say, you know what, sideways action, maybe slightly higher highs, maybe start a consolidation. If they both really come out with some bad looking forward numbers, not what's going on right now, that should say to us that we've got to be a little careful, because on the SMHs, any close in the next week, I'm going to give it a full week from now until Thursday, let's say Wednesday afternoon, there's a close below 98, let's call it 97.50. It's at 101.87 right now. So it's only 3.5 points. It's done that in the upside in a few days. So it could do that on the downside as well. But if there is a close, we've started a correction in the semis, and that's kind of a tip-off to say, be a little bit careful because they have led the market up and down for the last few years, and they came off the low of 80.71 to 102. There's a 22-point gain. I'd say that that's pretty big. That's 30. What is it? 30. 20. What did you say? 22. Yeah, that's about 28%, 30%, almost 30% gain. Very nice. So let's see what happens. Now, let me go through a couple of things here. I'll look at some of the questions that I had, but I just want you to go through the EUR. I did this in, folks, remember, I'm doing the noon update here at TFNN. So I will do all the parameters that we're looking at as quickly as I can in the very beginning so that we can open this section up to a real hour or 50 minutes, let's say, of absolute nitty-gritty work in many of the stocks and things that we really want to look at in just as great detail. So we've got this move to the downside in the euro. I draw this descending triangle. We've gotten down to a low today of 1.249. I'd say the 1.25 area, 1.125 area better hold. Now it's at 1.28. So 1.128. This is a nice little turnaround, but it's only the first. It's had many green bars of red, green over the last 4 sessions. You need a second big green bar to the upside. Now, will that happen? Well, there's the H pattern in the weekly chart to get yourself a cup formation after successful arch formation. A lot needs to happen, but make it as simple as possible. I give you numbers. If the euro-dollar currency pair, the euro, if it starts to trade in the 1.33 to 134, 1.134 area, 1.133 to 1.134. Oh, these numbers. That would be a positive, really positive, if by Tuesday or holiday, Monday, let's call it Wednesday. If by Wednesday morning, if the euro is trading above 1.135, that would be a turnaround that we've got to be really aware of in terms of the USD JPY. That's the yen currency pair. This is in leg E, right on the resistance line of the 200-period exponential moving average. We're going to be watching this really closely at 110.68. We need to see 111.70 to 112.10 closing in that area, and that would be really strong action for the yen. Now we're going to go to the dollar. I want to spend a little time on this because I think this is a very important moment all around in the market after the massive reversal from the 24th and 26th of December. You've got your big cup formation. You've got double cup formations in the dollar. The dollar's trading at 97.17 unchanged. I was surprised it actually made another recovery high yesterday. That recovery high, actually, I'm going to call this, it should be F/B. My favoring of it right now is to say it probably looks more like it's a brand new B. A leg B, that would be blue B, because if it reverts to a buy mode, then you'd expect that it's going to go to a C and a D. The MACD is strong. The stochastics at 89%. I mean, that is fabulous, and flat. I have to have flat. Flat's good in that area. And now what we're looking at is that there's a chance that the dollar is, should I do that now? I'll do this now. I'm going to show you some techniques in the Chapman wave. I'm going to be doing a lot of that here because I love teaching. It's one of the things I like to do. It helps you, but it also helps me. Because why? Because I like to see right there. Try for that. Okay. So what I'm looking at here, maybe that's a little too extended to the right. If you can't use the plumb line, that is at the bottom, what you think is an equal number of bars to the left, that's going to go back up in an equal number of bars to the right, then you have to find another candle. So I'm finding another candle. I'll first of all find this candle right here as an important candle. And then I'm going to draw to the right, the equal number of bars to the right. Let's just go back one and tell you what I'm looking at. The high that was made on the 14th of December at 97.71. But I'm satisfied with that. Has the look that I'm wanting. In fact, I'd say that it is probably a little bit too far out. Leave it one in, one out. There you are. So now what I'm going to show you is I'm going to draw a Chapman wave inside wedge. And I go to a particular low bar, and I draw this dashed line, and it goes to the most recent highs. And this, so I'm really satisfied with this. Everything about this meets the criteria that I discussed in both my CD, as well as my CD introducing the Chapman wave methodology, as well as the classes that I give, like I gave that full day class recently. And that says that by the 20th of February, the dollar should attempt to hit 97.71. It's trading at 97.17, so that's 60, almost 60 cents higher. That's a lot of cents to go. But that's what I'm looking at. I'll be right back and we'll talk about the fertilizers.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. I just want to say that the support for the dollar right now is in the 97.06 area. That's on a very near-term basis, but really the key support has to hold 97.03 to 96.93. And it just has to touch that and get back up again. If it touches and then holds low, it means you can go a little bit longer sideways. But so far, the technicals are suggesting the dollar is acting very well. It's got a second cup formation right here in the weekly chart. 97s down to the 95s. Now it's back up to the 97s. I think that there's a chance that we will be testing the 97.71 area. And if we do that, then all of a sudden, you're looking at leg C in the monthly chart, and that would be really positive. That's something I've been wanting. When we went long in April in the 90 area via the UUP, it was just a stair-step move. My thinking was that the American economy is going to be stronger. And if memory served me correctly, back in when Japan was the lead honcho, what was back in the 1980s, when they were producing those Toyotas and Hondas that were starting to show tremendous demand, did the job nicely. They weren't rust-proof. That was a problem. But everything else, the engineering, the specs that they had were to specifications that General Motors, in their wildest dreams, even for their top-notch cars like a Cadillac, just couldn't match. They were still using these plastic parts. It was terrible. So that's going to be very important, because my thinking was that the dollar would strengthen with the U.S. economy. I don't know if that's going to turn out to be 100% correct, but it was my thinking. And now we've got some proof that at least we can go from a short term to an intermediate term, now to a more longer term view of the dollar. We'll see if that's going to hold. Now, I want you to show you something really quickly here. The E-mini just went to a leg B in the 10-minute chart, leg D in the 2-minute chart. This is very nice action, a nice comeback, and it's saying that there are a couple of things going on here that is suggesting quite strongly that the shorter term, the near term, that's what I was looking for. The near term consolidation is still going to be holding off. If the Dow closes, it's now at 25,506. If it down 37 only, and the S&P is now down Oh, now it's only down 0.62. Very nice comeback. So if there is a gain after that big sell-off and the Dow can actually get back into the 590s, 560s, that would be really very, very good action, especially if it can get to the 2560s, 25,600s today. I don't know if it can do that. This is just intraday, nice bounce. We'll have to see what happens by the end of the day. And remember, we are looking at the SMH as being kind of a guide at the end of the day when the earnings come out and the reports come out for NVIDIA and Applied Materials. I don't remember what else is coming out. That was important. CF is CF Industries. This is in the commodity area. Had a really nice spike to the 45 area. Now it's trading at 42.62. I don't know what happened there. The weekly chart. You know what? If it held that 45 or 44.80 area, I would have said, "Hey, that's a good sign." But going back all the way, this big spike up as if it was news related, and then the news turns out to be lousy. I don't like this. All I'm saying is that I don't see anything. What was the other one? MOS. Let me see if MOS is working nicely. MOS is trading at 32.25. I didn't do this, did I, the other day? I think I chose the other one because this looked like it was a little toppy. Yes, okay, so I'm going to just put mine down. What do you do with the Chapman methodology? You identify the most obvious lowest low bar, merely count each successively higher peak. You want to get to at least a peak D. Here's A, here's B, here's C, here's D. Little plus sign on the D because it didn't break down. Well, it did for a moment. And now it's trying to come back in a V-shaped pattern. 32.25. Let me do the monthly chart. Let me do the weekly chart. Weekly chart. You know, it's stuck in this range. This is really tough. When stocks get range bound, you have to wait for a break of the inner range before you can really say that there's a move up towards the outer boundaries. So let me see. D, E. Okay, goes to a peak E, pulls back very sharply. That was in October, November. Goes to the 37s, and then it pulls back down to the 27s, and now it's come back to the 32s. Okay, the question is now, am I looking at this intermediate term or is it short term? If you're looking at it short term, it should trade at 31.85 MOS. This is Mosaic, the Mosaic company. I don't know, do they potash? What do? They do one of those minerals. So we're looking at 32.26 up 19 cents. If you're in it, I'm just going to say stay in it. Watch out if it breaks under 30.50. That's all I can say. It'll be great if it can get to the 32.78, 33.10 area within the next 3 days. That'll be really good action. That'll start leg C in the weekly. That'll be a big positive. Would I buy it now? This is one of those I wouldn't mind putting in an option call for March, and I'd do right in the money. I'd do the 32 in the money, call. And I that's what I would do. I'd give it time because I think it wants to go up, but it could still hang around for a week in the 31s, even touch 30.50. But then I think it's coming back. I like it. I just don't see any strength right at this moment. That's why I'm trying to say I'd stall a little bit. Okay, if you're not in it, you could nibble here at 32.26. I really, the buying should start coming in if we can study the 31.20 to the 30.60 area. If it comes back there, we've got to see, is it going to break down on the left side, low, or is it going to, I know exactly what I want to do. Nibble on the position at 32.26, add at 31.65. And I would have a stop of 31.20. There you are. That's the way I would look at it. I like the action. It's acting quite well. So the next question I had was, where did it go? I often get EADSY, EADSY, and this is the European, this is in fact the Airbus, European equivalent of Boeing, except they're not even close to Boeing. Dow's now only down 4, S&P's up 2, fabulous reversal back up. Amazon said Thursday it will not move forward with plans to build their headquarters in New York after rising opposition from local politics. I can just tell you, I know personally what's happened between the G line and Amazon Long Island City and certain areas, there was the first sign of a pullback in Brooklyn, that area, the Brooklyn area, Long Island City, just across from Manhattan. And then as soon as Amazon announced, prices just skyrocketed, and then they pulled back again, and then they came back. And now, if Amazon doesn't come, that is a big blow to the economy. But I have to tell you, that real estate market couldn't really take any more. It's unbelievable. Our prices have gone from the 2008 lows, where you could have bought a 3-family, say in let's say Greenpoint, for $750,000. Now, one apartment is $750,000 or higher. One apartment in a three apartment building. So I don't know where they could have gone. All right, we'll look at EZ in a moment. It's gapped up, pulling back from the gap. It is the Airbus, and it's at 30,000.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, so we're looking at EADSY, which is the Airbus. This is the ADR trading at 30.20, up 0.74, gaps up to a new recovery high. But you know, the old high was 32.10. What was it? 32.25 back in August of 2018. It cascades down to the 22 area. To be exact, it goes to 22.26. And now it's at 30. This is a huge gain. It's like a V-shaped recovery. But it gapped up, and now it's at the low of the day. I'm looking at this, and I'm saying, wow, everything tells me that it might hold for a little bit, but it's probably going to fill part of the gap, and it's probably going to hit the 29s. Better hold 28.80 into next Wednesday. Otherwise, it's made some kind of a short-term top, and this is great action if you're long. So I had a question here. Okay, what is this? Goose. Oh, yeah, we looked at Goose the other day. Let me just check. Goose. I discussed it as well yesterday, I think, on the show. Whoa. What does he say? Travis, great call. I was able to sell half of my position at the open this morning above 59. Wonderful. That's exactly what we were looking at. We discussed it, and I said everything about this suggests it's really toppy. It's people are spending this kind of money. There's no question about it. I don't know what the money is, but someone said the other day $1,000 for a coat, was it? So it hits this morning. It opens at 59.76. Now let me say that yesterday it closed with a little doji candle, which was a hint at leg D that this is getting there. At 59.19, about 60 cents off the high. And then what happens is today it goes to a slightly higher high, and now it's trading at 53.07, down $6.12, down 10%. Thank you, Travis, and you are the one, so congratulations to you. Really nice positioning. So Goose, I think, I should make a little joke about cooking its goose. I have no idea. I remember a long time ago I was walking in Manhattan, lower Manhattan. Well, where was it? I was in the Soho district, and I believe it was there, and I saw this Canada Goose place, and I said, oh, I've heard about this. And I went in and I looked at the stuff, and the quality was really very good. I think it's a Canadian company, but the prices were also very good. Not very good, but very, very high. It's just not for me. Some people love it. That's your business, not mine. It's trading down now at the level that it was only just 4 days ago, 5-6 days ago. So that's not a big deal. What is a big deal is the fact that it has pulled back from a 50% rally from the low, and now it's going back to about a 25% rally. And that says, got to watch out. That is a problem. If it closes down Friday as well, that's going to say, uh-oh, be careful. So great. Next question I had was XLI. Yeah, the XLI is acting a little different. Remember, I've been making the big distinction here that the XLI is more the true industrial spider fund. That's really the Dow. They call it the Dow Industrials. Come on. I mean, industrials, Verizon, Visa, McDonald's. What are we talking about here? Cyclicals in a way. Johnson & Johnson, Intel, yep, maybe some kind of electronic industrial. I'd put it into that category. So the XLI is holding very well. It's just down 19 cents to 74.85. But most importantly, the MACD is holding better than the Dow. That's what I was expecting when I looked at this. And the stochastic's at 94%. And that's suggesting that whole area of 72.81 to 72, where the 14 and the 200-period exponential moving average are, that's going to be key support. So that's 200 points, 2 points down. I'm looking at this and I'm saying, you know what? That weekly chart, single leg A, oops, I'm sorry, it's a leg B. This is A right here. This is a B. It's just a spectacular move to the upside. Only green candle since the green candle of the very last couple of days of December. It says it's just time for a rest visually. That's all. The market doesn't know. Is the XLI, the S&P Select Industrial Spider Fund, looking at itself and saying, I think I'm a little overbought? It doesn't know. It knows nothing from nothing. So we're looking at this. I'm the one that's looking at it and saying, gee, it looks kind of like it's got an up channel, a beautiful up channel in the daily chart, an incredible single leg A, it's really a B, in the weekly chart. It just looks like it needs a rest. Now, technically, I'd have to wait for confirmation of a big pullback in the MACD and stochastic, and that would say that it would have to go to the 91s before this MACD seriously crossed negative, and the stochastic went from 94.78 to 87 to 78%, under the 80% level. That's a big move down. So that says it's probably going to take time over a period of a couple of weeks. We'll be looking, and then we'll say, oh, finally we're getting that test of the 70 area in the XLI. All right, next question I had was, just running through the questions here. Yes, I had a question that was asked of me about, now let me just talk to this issue right here. Had a question from someone earlier in the day. We were looking at their charts. They actually chose the 240. They look at the 240, the 4-hour chart. I don't do work with a 240 chart. It's not that I couldn't. It's not in my vernacular. That's all. So we're looking at the 240-minute chart. If I can find the darn thing. Was this it? Was this it? Yes. There was a move in the 240 E-mini. I had it a perfect peak E. I think it was at 10 o'clock. I think it was at 6 o'clock this morning at 2763.00. Little tiny Joji, and then it was followed by that big sharp 830 move down, and the MACD turned down, stochastic turned down, but I haven't got it across yet in the 9 and the 14 period moving average. So I'm watching that closely, and now we've had this rebound to the 2752 level, except that he was at an F. That happens in different platforms. I'd like to say I have no idea why. And I'm going to say I have no idea why. I thought I knew, but I don't. Why? Because this made a high of 2763.00. Mine's at 6 o'clock. His was here on this candle right there at 5 o'clock in the morning. He went to 27.63. I'm at 27.59.75. It happens. I have people with different software packages. Now, what I'm absolutely fascinated, and all of us have been totally fascinated with in the Chapman methodology, is that somehow, some way, it invariably works out that even if you have different data, you'll get to the D, maybe when I get to the E, or I get to the E when you, but it won't be less than the buy mode completion start, which is from D onwards. And that's really important. If it failed at a C and I'm at a D, I say, wow, and it happened often enough, I'd say, wow. So now you got to go with software packages. No, it just, I don't know why. It turns out a majority of the time when we've had to check them together, we found that we at least got the buy or the sell signal, but the letter might have been different. I just wanted to go through that, just to let you know. Not everything's absolutely foolproof. I try to do whatever I can to make it as foolproof as possible. We'll be back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, folks, you'll remember that my expression, a rectangle formation can last a lot longer than your patience. So looking at the XRT, this is the retail index, the S&P Spider retail, trading at 44.94, up 0.03. Look, it makes a high of 45.01 back around about the 20th or so, 18th of January. Then it pulls back to 43.31, and it just kind of stays in this pattern. So now I'm going to do this. The 45.01 peak E was made with the MACD still good, and even now it's kind of flat. It isn't breaking down. Stochastic took a dive. The on-balance volume rallied beautifully, and then it pulled back, and now it's back at the most recent highs. So what I do is in the Chapman wave, I go peak E, and then under it there's a gray A because it's not at a new recovery high, then a gray B because it's not at a recovery high, and that's telling me that if there is a new recovery high above 45.01, check out the technicals because it could turn out to be a brand new C, which says you can still go to a D, or it could be an F/C. Goes blue because it's above the previous peak E. I should have blue F and a gray C, but that it makes it too complicated. It's real clear. F/C, no position yet. I don't need a position. It's above the 9-period moving average. MACD's good, Stochastic's good, but I have to start making decisions if I'm in anything in the bank index. So if I'm looking at this, I'm saying, okay, the high that was made yesterday was 45.03. The high that's made today is 45.03. So this F/C stays another day. This tells me that if there is a pullback, even if there's a nominal new high, I have to watch the pullback because that pullback takes you under 44.50, under these key moving averages right here. We could be stuck in the rectangle formation. We could even go to the D, but we're already in a trading band. Nothing to see here, folks, for a little while longer, okay, until you break the 43 area on the downside, or you really break into the 45.50s to say, I'm out of this. I'm going for the 45.94, 200-period moving average. Why did I mention that? Because you didn't even need to talk about it since it broke down back in November sometime. Right there, that candle on the 15th of November, it breaks down from the 47.20 area to the 46.11. That's it. Tries to rally, cannot get there. And we can forget about it. It means nothing. When you're down at 39 at the low that was made, 38.10 on the 24th of December. Remember, 24th and 26th are the 2 days of the bottoming process. You didn't even have to care, but look at that beautiful doji, and now it starts to move to the upside. Now it's taken time and price to the side, but it didn't make the V-shaped recovery by breaking decisively into that candle of the December 30-ish area, around about 45. So that says, yeah, let's watch this real closely. A lot of evidence that says you're getting closer to the 200-period moving average. You haven't been able to touch it yet. You can still bounce around before you do that. That is the retail sector. I had a question about the where to go. Where to go? I had a question about I had a moment just a second ago. TVIX. So the TVIX. This is really going to be very important because the TVIX this morning earlier. Yesterday it closes in the 34s. I think it was 34.50. Was it 34.67? It closed at. Today it gaps up and it goes all the way to 37.34. Now it's trading at 35.10. I'm looking at this and my eye quickly goes to the VIX index, which is over there, 15.768 on that screen, up 13. Still in the 15s. You know, it's long. I made this a big deal when I did Tom's show yesterday at the 4 o'clock to 5 o'clock area. When I was subbing for him, I said VIX going into the 17s. Now you've got to start saying consolidation in the market is occurring. Going into the 18s and then the 20s, you're going to be looking at triple-digit down days. Up until then, this is a comfort area. The Dow should be up much more right now, but it's not. But it's holding okay. Dow 34 down. S&P is just a fraction up. This is going to be important. My eye says that the MACD and the stochastic, the on-balance volume, they're all in an area where you could start to see a rally in the VIX index. But I would say that until there's a closing price above 35, what was the high today? 37, I didn't mean 35, I was going to say 36.70. No, but if we've already hit 37.34, unless it's a close tomorrow afternoon or maybe Tuesday when we come back after the break, unless there's a close in the high 37s, that will say, uh-oh, people are starting to, fund managers are buying insurance, they're very nervous. But in this area, it says that any rally will probably find some support, but it's also saying that this is the area that you should be seeing triple-digit moves to the upside, strong double-digit 15, 22-point moves in the S&P on the upside. So something's telling me that we're starting to stall out here. And this weekly chart says, hey, after 1, 2, 3, 4, 5, 6, 7 red candles, maybe it's time for a little green candle. So I'm thinking next week we start to see some weakness in the general market and we start to see some strength in the TVIX, which is 2 times long the VIX, the short-term trading index. Remember, it's just a short-term instrument. Someone I remember had back in 2015, was it that big sell-off, August, September, I think it was, had VIXs, bought a lot of the VIXs and didn't cover, had big profits, didn't cover, and then just sort of held them. And they went from whatever they were down to, I mean, they just shrank to pretty much nothing. So you can't hold these things. You just can't hold it. So that's the VIX. Just be a little careful. Have some discipline here. If you're inclined to think that the market is going to take a dive, that's fine. Give yourself a certain percentage of it. I wouldn't give yourself an expanded percentage. I wouldn't say, oh, it's at 35 now. I'm going to give myself 10%, 3 points. You know, once it gets to that 10% level, you're liable to say, you know, we're so close. I'm going to get, next thing you know, it's 22%. Hey, take your 2% risk, 1.5% on a small position. You can do that many times. And then when you're right, you'll make it up and bam, one move. And the other thing is correct. Yes, as S&P in the Gen says, it is a form of insurance. If you've got long positions, this is another way of ameliorating that. I think options are another way. There are different ways of doing it. All right, got that out the way. Question, RUT move up. Is it like November of 2016? Let's look at the RUT. So the RUT is the IWM, trading right now, IWM, trading right now at 153.96 from 2016. Let's see what happened in 2016. There it is. Oh, that low there? Wow, that's a good question. The candles aren't the same at all. And that one also had a Roman candle at the lows and not the highs. So that was if you close above the Roman candle for 2 consecutive weeks. That's really positive, which it did. Now, what is the question? RUT move off like the, yeah, okay. Yes, it is in percentage terms, it's even bigger, way bigger, because you've gone from 173 down to the low of 125.81. Let me just type that in here. 125.81. Oh, man. That's a tough question. But my suspicion is that it is a pretty significant low. And you did it in a trough B, just like you did it before. But that one was from June of 2015 at 129 to February of 2016. That's a long time. We haven't had anything like that in time. That was an A to B for C to D. I'll be back. Basil Chapman.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're back, and let me just do a couple of things here. So that was the item. Tomorrow I'll do the item. We'll take some time. I'll try to explain. I had a question here is why the intraday bounce? So we're at a strong tipping point for a timeout, have a nice pullback from the retail sales. And what in the world brought the intraday bounce today? That's a couple of things. Is that the MACD is still not quite ready. Sorry, let me go back to the Dow. That's really what we want to go apples to apples. Don't forget, you've got Steve Rhodes coming up, then you've got Dave White and Tom O'Brien. And I'll be back tomorrow. Have a great day. Let me just say, before we go out, Dow's down 36. You see that MACD is still hugging. It's got a little white between the green line and the red line. Hasn't yet turned down. Stochastic still at 86%. There's residual strength, and these little waves of strength are coming in. And it's only when they dissipate will we start to see the MACD turn down, and it has to maybe have a wide beta, a wide theta maybe, between the green line, the 9-period differential, and the red line, and then you're going to go down deeper. If it's just a narrow little one, then you're just going to go sideways. But this is exactly the area where I was looking for to say this is where you should start to see some kind of downside action that starts to hold. Doesn't have to be very deep, but it needs to hold. This one hasn't held so far. We've come back quite nicely, but we're not at the highs of the day. So I'm looking at this and I'm saying, this is where I'm starting to see choppiness. And I wouldn't be surprised if over a period of 4 or 5 days, we start to see lower highs and lower lows. But you've got to do this one step at a time. And the IWM suddenly showed strength today. And that's another reason why some buying's coming in. So we're not done yet, but this is the sideways move that I'm looking for. We'll see if we can actually start to decline. So that was the one thing. The very final thing as we're about to go out is just keep watching the dollar and gold. It seems to me that those are the two that are fighting for position here. The dollar seems to have an edge, but gold is still only having a high-level consolidation. Watch them closely. So we're just about to wrap up, and I think I've covered almost everything I wanted to today. I bet as we go out, I'm going to be sending to those who did my webinar, I'm going to send you a chart that shows you the instant restart, not in just the weekly, it's the daily, the weekly, and the monthly. That is amazing, an instant restart example. I'll be back tomorrow. Have a great day, and stay tuned for Steve, Dave, and Tom.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.